G'day folks, welcome back to Pete's Investing. It's February 29, 2024. This is the Nat Gas price update. Now I've got a fresh bullish breakout and the question is, will it continue? And also we're including a new indicator which helps identify tops and bottoms, and we're also including a trading idea at the end of the video, so stay tuned for that. In terms of the latest news for natural gas, US natural gas futures remain stable after a recent increase supported by growing European market activity, particularly from Asian buyers drawn to low prices. Despite record production and mild weather suppressing domestic demand, the short-term outlook is bullish due to rising global LNG demand, potential production cuts, and a possible shift to gas-fired power generation. First, looking at the natural gas commodity price on the weekly, we've got the ADX down here is still showing a bearish momentum, but the CCI 150 is still tracking in line with the price, so no big movements there on the weekly. There were a couple of bearish divergence back here, just for historical purposes for those new to the channel, and the price fell off in both those instances in alignment with that CCI declining. On the daily, we do have a fresh bullish breakout on the ADX with those new, more recent highs, and that's also illustrated by these blue arrows, which indicate more bullish movement. You can see there it happened there as well. So we look for these clusters for a potential reversal, and you can see those red candles up there. And these are usually used in alignment with a divergence. You can see there was a bearish divergence on the CCI versus the price, as well as those bearish candles, and that price fell off quite substantially. And on the hourly, we've got also a bullish movement still, making more recent new highs. Now you'll notice we've also got a bearish divergence on the CCI. That hasn't broken those highs from the previous high there, whereas the price has made new highs. So just be careful we don't see a retracement to the downside. Doesn't mean a collapse, just could mean a little retracement in the short term before making further upside. Again, there's those candles. We had those bearish candles and the price dropped off in the short term. For BOIL, this is ProShares Ultra Short DJ UBS natural gas. You can see there the ADX 25 is still bearish. The CCI 150 is bullish, and that's pretty much probably a bullish divergence because the price is pretty flat. You can see there on the daily, that's the weekly chart. On the daily, we do have still a short ADX 25 versus a bullish divergence on the CCI 150 versus lower lows on the price. And you can see there we've got a recent blue candle indicating a potential rise. So we might see a bit of a pullback now. A rise in terms of a retrace to the upside in the near term. On the hourly, it's also bullish on the ADX, and the CCI 150 is also moving to the upside, and that gives you some opportunities to go long on when the CCI is above these waves. And again, stay tuned to the end of the video to see the trading idea using the Heikin-Ashi, and also how to trade with this CCI. This is the United States Natural Gas Fund, UNG. Again, bearish on this is the weekly chart, bearish on the ADX 25. Somewhat bullish on the CCI 150 versus lower lows on the price, and we may see a bounce from there. Nothing real dramatic happening at the moment. On the daily, it's just about to break to the upside on the ADX to a bullish movement. The CCI 150 is already showing a bullish momentum versus the lower lows on the price, and that's starting to get a bit of a bounce as well. And lastly, on the 1 hour chart for UNG, bullish on the ADX, and the CCI 150 is still moving to the upside. No sign of reversal yet. We did have a bullish divergence back here versus lower lows on the price, and it bounced off that area quite nicely. Now I've got the ProShares Ultra Short Bloomberg Natural Gas Fund, KOLD, bullish on the ADX 25, very flat. On the CCI 150, it's moving to the upside after that bullish divergence, and the price is very flat at the moment, but a lot of blue candles there, so we might see possibly a bounce. On the daily chart, showing a bearish movement on the ADX 25, a bearish divergence was showing up back there versus higher highs on the price, and the price did pull back, hit our target between the 23 to 38% level, and it's made further reductions now. The key area to look out for is the 61%. If it breaks below that, we're going to see a lot more declines in the price. And lastly, on the 1 hour chart, still bearish on the ADX 25, bearish on the CCI 150, which is moving in line with the price as well. In terms of the trading idea, it's one of many trades we can make. You've got the bullish, one of the parameters is when the price turns bullish on the Heikin-Ashi. This is a Heikin-Ashi graph on the price chart. When it turns green, that's a bullish momentum. You go long, and when it turns red, that's going short. Now in terms of the trading idea is, again, this is the 1 hour chart on the average down approach. This is a 1 hour chart on the stop loss approach. So depending on which strategy you use, I'm giving you both scenarios. So more recently here, this is natural gas commodity price. When the CCI 150 breaks above these waves of moving averages, so on that one there, you can see they're on the right two charts. That's where you start going long during this period, and you stay long, and currently you're still in the long position if you're holding this on the average down approach. This is the stop loss approach. So on both strategies going long, since when it broke above there, you only trade when the Heikin-Ashi is green, and when that daily is broken above the moving averages, you go long. So this on the average down approach is generated 5,080, and on the stop loss approach it's generated 1,700. Now in terms of going short from back there, I've also put in the period back here, you can see there, and you stop the short trades when that moving average, when the CCI 150 breaks into the moving average range. So you can see there you trade up until that point on both the average down approach as well as the stop loss approach. And you can see there that would have been where you stopped trading the short positions, and you would have started going long only when it breaks above. You do not take trades when it's in this band of moving averages. So when it stopped going short at that point there, that average down approach would have generated 2,115, and the same period over on the stop loss approach generated 855. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.